Hello from Otet Markets. This is Ahuro with the BOE meeting review and market reactions. As you know, today, Bank of England had a monetary policy meeting and interest rate decision. Surprise, we had somehow, but the market was expecting this decision. As you can see here, BOE cut the rates by 25 basis points. That's the third rate cut since COVID-19, which the central bank in United Kingdom increased the rates to more than 5%. With this rate cut, which was in line with expectation, pound lost more than 1%, 1.1% actually, and the stock markets got somehow positive reaction. They gave a positive reaction, but if this decision was in line with expectations, what moved the market? As you can see in here, what's very important usually in BOE meetings, we are looking at the voting numbers. Market was expecting 8 votes for the rate cut and 1 vote for holding the current rates, which changed this in the in voting, and all 9 members of policymakers or 9 policymakers in monetary policy committee in Central Bank of United Kingdom, they voted for rate cut by 25 basis points. If you remember, actually, you can see here also, in a previous meeting in December, 6 members, they voted for not cutting the rate or for holding the rate, and just 3 members, they voted for rate cut. And now with these changes that all 9 members, they were supporting the dovish policies and the cutting the rates, that means that these dovish policies have very strong demand among the central bank policymakers in United Kingdom. But what's the reason for that? That's an example you can see here. SP global or market construction PMIs fell to 48 in January, down from 53.3 in December around. That's the same for other data. Like if you look at the labor market, you can see the same weakness. If you look at the orders, factory orders, you can see the same weakness. If you look, that doesn't matter. GDP numbers is the same. Generally, economic data and economic momentum is slowing down in United Kingdom. It's at least not for 1 or 2 months. It's like more than 5 months. We can see this weakness in the UK labor market, in the UK GDP, retail sales. This is in previous 5 months. That's continued. That's made the central bank's policymakers to be really worried about the future of the economy, and they cut their rates. While they cut the rates, they also signaled for the 3 more rate cuts later this year by end of 2025, which gave more dovish sentiment, kind of the sentiment or more dovish feeling to the market. That was the reason to see that the GBP lost more than 1% against its rivals, especially against US dollar. Let's check the market's reaction. Actually, the reaction in the market, as mentioned earlier, market reaction was in line with expectations. We were expecting to see that GBP to losing against USD after this decision, but as I mentioned, the 9 votes compared with the 8 expected votes for rate cut made this fall more sharper, and that's why the GBP USD kind of reversed from 1.25, very important and key level. With this decision and with these reactions, with this market expectations, and especially while we know that the US dollar also again is getting stronger and getting more demand, with these decisions, we can say that, okay, we can expect the GBP USD to go back to its slow downtrend and continue the downtrend that it had before. I mean, this downtrend it's got a little bit side movement, and now we can expect to continue the downtrend. On the stock market, we can see that the UK stock market, they take advantage on that because of more dovish policies can be somehow affected in the stock market, affect the stock market to get more encouraging, actually, the investors and producers to have more activities, get more money from the banks with the lower rates. But as you know, in United Kingdom, it's not just about the central bank policies. We know that after 14 years, finally the Labour Party they got the government in United Kingdom, and the economic policies that the Labour Party had recently, they managed to start in the UK. That's a really inflationary decisions, especially increasing the taxes, especially with the support, giving the more support to the unemployment and stuff like that. They make the labor market, they make the UK economy more inflationary. They increase actually the risk of inflation in the UK economy. So with this decision, and while the market expecting two more rates cut from the BOE till end of this year, 2.5%, the currency inflation in the United Kingdom is very likely to get more. That's why we can say that right now with this decision, while the stock market is taking the advantage on that and gets benefited, but still there is a risk of inflationary, and if that continues, stagflation is very, very, very likely if especially the Labour Party continues the current policies that it has. That was the market reaction and market decision. In other markets, if you look here, for example, if we say that what was the reaction of the GBP, the BOE decision, for example, in the gold market, it doesn't have a direct reaction directly that much, but as you know, the British bonds also they have some demand in the market, and with the less rates right now, with the less yields right now, we can say that now it can increase the demand for the other safe havens, especially the gold. So the gold can take advantage of that, and that news can be positive somehow for the gold. But in the cryptocurrency market, that not big market mover or the changer, because the Bitcoin market right now, they are mostly waiting to see the SEC decisions and new regulations. So that's why we cannot say that, okay, that decision can move the cryptocurrency market or can move the, for example, the gold market. But generally, some has a positive for gold. That was the BOE meeting, their decisions, and market reaction. If you had any other questions, don't forget to write in the comment section. I'll try to get back to you as soon as I can. Have a good time. Bye-bye.